Happy Wednesday, investors. This is MyStockScanner Live, your midweek check-in to cut through the noise and invest with confidence is ready for you. We are powered by the 3-point playbook, and that portfolio are at present up by 30.9%. We'll call it 31 just to cheat a little bit. Our experts, Liam Flavel and Hans Henrik Nielsen, are right here. And quick question. Did you guys throw gold into the street yesterday?
Yeah, I sold a ton, so that was why.
Yeah. Hans Henrik, something is your mic cut over to the other mic at the moment. But there was a little bit of a sell going on yesterday. And Hans Henrik and Liam are the men with the answers. My name is Jesper Behrens. I'm the man with the questions. And some of them are from you, as you have written us at FOMO at mystockscanner.com. FOMO, mystockscanner.com is the email address that we are using. And on in general, but also jewelry in form of Pandora, Novo, Swedish stocks in general, and Saab in particular, Netflix, Tesla, and I'll even drizzle some tech dust into the mix. But first, I'm going to give you a tsunami. I'm going to give you the biggest number we had so far of number of the day, 27.9 billion US dollars. That's number of the day. Let's scale it down just a tad, guys. Gold prices are lowering a little bit today. I'm looking at my screen. I see a drop of 0.65. There's a little bit of, could you say, profit taking going on? Or what's the reason for gold, silver, rare earth, and mining stocks in general are plunging a little bit?
Well, first of all, my microphone, is that better?
That's much better.
All right, cool. I'm not sure what happened. Well, gold and silver and everything just went ballistic, parabolic lately. So I think that was a bit of a talk about a bubble, an overhype. So that was a sell-off there. There's no major news that causing it.
But it had an effect on the 3-point playbook portfolio. You guys, as I said, threw gold into the street, or you put it on the market, really. That's what you did. You sold a couple of stocks. And was that, as you said, you don't see a big movement, but you still stepped out of them?
Yeah, well, we basically just followed our rules. Let me just show you here. We had, for instance, the Barrick Mining Corp. We made something like, was it 65% on that in the portfolio? We entered it, as we can see down here, and we exited yesterday. We wrote an article yesterday that was about another stock, but that is what happens if it breaks certain levels. And yesterday, Barrick just went straight through these levels. It's not that it's not a good stock, actually. When we look at our playbook here, we normally look for quality, as you know. That is our first question. Is this a quality stock? And it still has a quality score of 85, and the revenue is going up and so on. But there was such a massive drop in the metals yesterday. And mining stocks is a bit of a leveraged version of gold and silver. So we follow our strategy that we describe in our course and everything. And when it breaks down massively like it did yesterday, we sell.
And what you're pointing towards now is the trading view. It's part of where you can see the movements in a stock. And if people are sort of a little bit, I know that we have a lot of seasoned investors, but if should there be anybody who's just immediate and just starting out, can you tell the lines that you have in your trading view? What are the different colors of the lines going?
Well, this is what is called moving averages, and it sounds a bit more technical than it is. We all know an average. You add a bunch of numbers together and divide by the number of numbers, and that is basically what this line here is. That is a line that shows what is the average the last 20 days. The green here is the last 50 days, and the black is the last 200 days. It's a gauge of where's the trend going. There's nothing magical in them at all.
If you change over to the playbook, like you just did before, if you take that route in, you will also have that view in there. First, we, of course, as always, ask if it's a quality company. if you see a lot of green, that's basically what we're looking for. You describe some of it. Then comes the timing, the quality part of it. Is it a quality stock? And we get to see that right there. If it's a quality stock, now we take it out a little bit, and we can see it's flying a little bit over the line. But that's because of the PE is so high on companies like these.
Yes, what we basically do in this value graph, as we call it, is we say the price of a stock is always the earnings per share, meaning what is this stock actually earning, and then we multiply it by what is called the PE, the price earning. It simply just tells how much investors are willing to pay for every dollar there is in profit. When we multiply these two, we get the price. And what we're trying to do here is that we're trying to look a bit into the future. We're not predicting, but we're trying to get an idea of if there is some good potential in this stock or not. If the price, the black line here, if that is low, then there's a lot of potential up towards the upper line. Right now with Barrick, it all looks a bit expensive, so I actually feel comfortable selling it.
And that is because you follow the rules that you have, the strategy that you have, and it goes for every stock. It's not just because it's a mining stock, not because it's gold. We can take any stock and you follow the same strategy when it comes to that.
We have about 100,000 papers and ETFs, stocks and everything. You can do it with every single one of them in here.
One of the stocks that had earnings yesterday was a stock that we touched upon last week, Liam, and you have been very quiet. It's not because you don't fancy gold or anything, and it's not because that you are into Netflix more than other people, but it was a stock we had up in our face-off on Friday.
It is, and we said then it was a fantastic stock that we'd probably have bought Amazon, which is the other stock in the face-off that we looked at, simply because of its exposure to AI and possibly a higher return in the short to medium term. With Netflix, you can see just very quickly on the playbook page. I won't go over it because we talked about it a couple of times recently, but it's as good a quality as you can get. The earnings are going up and up and up. What happened yesterday was that they had their earnings call and they admitted that they took a tax charge in Brazil. And it was quite a hefty tax charge. It's a one-off, and it dropped their earnings per share down for this quarter. If they hadn't have had the tax charge, they would have beaten the analyst estimates by about 30%. So overnight, as a knee-jerk reaction, Netflix dropped about 6.6%, and we think
that's what it's not on the market. It's aftermarket. That's called.
It's aftermarket. There's a market that goes, there's a market that goes on after hours that some people can actually buy into these days. I know with Interactive Brokers on my own trading accounts, I can actually access the aftermarket and trade stocks on it now, but there are different rules that apply. It's effectively allowing people to bet on the direction of shares when the market is closed, which is what a lot of people look at.
But and it wasn't a Brazilian wax, it was a Brazilian tax, but it got shaved off a little bit on the price. Doesn't that make it a buy now, Liam?
It's looking like, okay, so if we go through the playbook again, so we've ascertained it's a high quality stock, so it is something that everyone should aspire to in their portfolios, having these sort of quality stocks in there, because they simply don't drop as much when the Brazilian tax hits the fan in this case. What we can see here from a value chart, we can see the very different valuations that we've got. We've got the red is our bear case, and that's our worst case scenario, which in this case, we think from last night's prices, we think there's an upside of around 3.2% by the end of next year in the absolute worst case. And you can see here that we're trying to tie this red line with the bottoms of the previous price changes. Some of them, we could move it all the way down here. It's sort of, it's a subjective issue, this one, to say which tops and bottoms do you do. So we could go down here and say we might lose 14%. But actually, in the bull case, if Netflix really excel in what they do in the next year and a half or so, we think there could be a 44% return. And then we've got a middle ground that says, okay, we think they're probably going to be around here, which is our base case, which is 17.4. And we often look for our base case to be twice as much as the bear case, so that actually the odds are stacked against us, sorry, with us, and not against us, and we make money in that way. The issue that we've gone.
Oh, sorry. No, sorry. It was just to say that with the drop of 6-7%, if that plays through to today's market, we should add those 6-7. The price has dropped down, so our odds is actually a bit better today when we open up.
Yeah. So from
can
that
I ask
point of view, go on.
a news question, because the rumors are that Netflix are looking in, could be the buyer of Warner Brothers. That would be a majestic news thing. The rumor alone gave Warner Brothers a bump of 10%. Let's just close our eyes, not on screen, there's no need to. But imagine that Netflix are the buyer of Warner Brothers. What is that going to do to the price?
What often happens in this sort of situation is that the company that's buying, they're the ones that are shelling out quite a lot of cash for these sort of things. So they tend to drop because that cash is moving from their company to another person's balance sheet. And the value of the company as a whole, as the assets, is less. There's also the risk factor involved in taking on and acquiring another company and assimilating them into your own operation. I don't know the stats off the top of my head, but quite a high percentage of these actually fail and either produce a worse company from an investor point of view, or it doesn't actually have the synergies and the returns that were promised originally. So I would expect it to be slightly negative for the Netflix price if they did agree there. It was an impromptu bid for Warner Brothers. It was totally out of the blue. There are 2 or 3 others in a running. I don't see it as a near-term sort of issue for the share price here. Just on the prices very quickly, what we always look at from the third question here is whether this is the right time to buy. With the stock coming down to, it's going to be down 6%. So what's that? It's going to be $60, something like that. It's going to come in at about 11.80 down here. We need to see a good bounce because it's trading on the simple moving averages that Hans was talking about just now. We want to see that bounce and that hold as a support level. If it drops below that, it then becomes resistance that the stock has got to overcome, and it means we'll hold fire on buying anything like this until we see that it's now a support level.
And if you want to see Hans Henrik bounce, you just tune in tonight, because at about after market tonight, it'll be after 10 o'clock, he's going to bounce around the room basically, because we're going to get Tesla numbers, and we're not going to Hans Henrik, we talked already about that, what to expect. We know a little bit about Tesla, what to expect in that sense, that we think, well,
we'll see some good sales numbers, and that is because US have had what is called a tax credit. So they have basically given a discount every time a person bought an electrical car. Trump has stopped that now, and that means that Tesla have been out saying to everyone, hurry up, buy your Tesla car now, because in a few months it'll be $7,500 more expensive. So that have rushed a lot of people, not just to buy Teslas, but all electrical vehicles. I am pretty sure that is going to show up in the sales numbers. That might be a one-off thing. So the most interesting thing will actually be seeing what is their guidance, and also the margins, meaning how large a percentage of the revenue actually ends up as profit.
And it is, as I said, after market tonight. You promised you would stick up with a glass of hot milk and your pajamas wearing, and then you will tell us how the numbers look.
I will give a preliminary look at it, and then maybe some more tomorrow.
Are you going to wear one of those hats that people used to wear in the Victorian
time? Always do.
Yeah, okay.
We are fairy tale country. What
it's
do you
my lucky stock hat.
But Liam, I'm not going to let you go unemployed. Tomorrow, it's Thursday. That means that we have the Tech Thursday article. There's so much news going on. I could pick down on the Samsung and Google's new glasses. They're going to compete with Meta. But there's also deals being done between Google and Anthropic, which sounds like an open AI moment. And then the chips. And I'm not talking Kim's or anything, but other kinds of chips.
I'm actually spoilt for choice, and I don't actually know what I'm going to talk about tomorrow. You have the chips. So there was a chip company in the US that's just come out with a fantastic new chip, and they've reported extraordinary results on it for an AI point of view. So that's a big one. The Google news with Anthropic, it's sort of a bit like OpenAI. We've talked about it before. The other big one at the moment that I don't really want to talk about too much, because it's the old head of Tesla AI and also the head of OpenAI, one of the original founders of AI, has some pretty horrible views of where AI is at the moment and how long it's going to take to actually make money. So he thinks it's good, but we're a way off. So I'll pick tomorrow which one the best one is.
And look out for it. It's going to be on our platform, of course, MyStockScanner.com, and it'll probably show up in one of our groups as well, the members group, as an article. Thursday Tech it is. Yesterday, we had a poll, the Tuesday poll, and it gives us the Wednesday watch list. We asked our users, which Swedish stocks should we take a look at for you, and maybe even do more news about. And I'm not going to do a hit list, but I can tell you Volvo was involved, Boliden, Sandvik, but on top, I'm almost going to say no surprise, they are flying high. Saab came in, and I can see we have Netflix up on the screen right now. I'm sure that we'll have Saab in a minute, as we need to bring that up.
We'll move that across.
Yeah.
So Saab, we'll just, if I can actually type properly.
Yeah.
Saab, yeah, they came out as top. It's an old favourite of ours. We made, I don't know how much we made on this.
100% we made on it, yeah.
And when you
like
talk
that,
it's because it was in our portfolio at one point.
It was in the 3-point playbook portfolio. We ran some webinars earlier on in the year that focused on various different topics, and one of the topics we did in February was the defence stocks, which was pretty good timing actually, because pretty much about 20 minutes after we did the webinar, I think all the leaders of the EU looked at it and thought, well, we better put some money into the European Union Defence Pact then, hadn't we? So it's obviously we foresaw that, and it was an obvious one for us. But we looked at this. We bought a number of stocks. Saab wasn't actually the best performer, but it was a really strong one for us. I don't blame anyone for looking at this and having this top of their poll, because you can see just from point one of the playbook, everything green. You can see, apart from the price-free cash flow, that's slightly just in the red, but you're looking at a quality score of 80 and earnings going through the roof, and a PEG score, which is how much of the earnings is actually baked into the price at the moment. So a low score means that actually there's still gas in the tank for the price to go up quite a lot. So those are the numbers we sort of look at as headlines. Then we look at things like analyst changes. Have they changed their mind on where that stock is going? They're pretty much break even on this. They're only 1% down in the last 30 days and 0.5% down in the last week. But their returns on capital, which is how efficiently they're using their investment money, is excellent and growing. Return on equity, return on invested capital, they're all slightly different versions of the same theme. As I say, the one area that we look at here and think, actually that's quite high, is the price-free cash flow. And the free cash flow is the amount of money that a stock generates in its day-to-day business. It's very difficult to fake that in the account, so it's a key number that we look at. So from a quality point of view, the stock is a really, really strong one. From a valuations point of view, you can see here that this is where we're slightly unstuck, because the stock is in nosebleed territory, where actually it's really, really highly valued because it had such a good run up, obviously because of us at the beginning of the year. But you can see here it's come down since about a month ago. We think that actually we wouldn't go into it at this level. This would break our second rule on the 3-point playbook, because we like to see stocks down here by the analyst line, or even down by our bear case line, before we'd look to go in there, and that just gives us the upside to go upwards that we look for, and that gives us our explosive growth that we've seen in stocks like Saab in the past. And then just from a point of view, from is it a good time to go into the stock? Actually, it's below its 50-day moving average, this green line here, and that's a key line for us. We'd wait until it came up there. turn that into support, as I was talking about just now, and then we'd consider going into it. But at the moment, the valuation is just too high.
We
for
might
us.
also mention we have our own 2 indicators down in the bottom, what is called the MTI, the momentum trend indicators. It's something a lot of our members are using, and when they are both red, we should be a bit worried, or at least get some good confirmation before we enter a stock.
That's the Swedish. If we cross Öresund right outside my window here, and then come back to Denmark, there might be calm seas out there, but there's not calm seas up at Novo. The chair and directors quit after a boardroom riff. And if I look up at my screen, 3% down. Hans Henrik, is that the reason that Novo is 3% down today?
Yes, yeah, but we had it just shortly in our 3-point playbook portfolio, and that is because Novo is still very high quality, as you see here. As Liam said, that is our question number 1. Is this a quality stock? The earnings is still going up, the revenue is still going up, the cash flow is fine. There is some red here, but overall, this is absolutely a decent quality stock. What the market don't like is uncertainty. And when you get a former CEO, the CEO before the last CEO, when he gets in and basically sacks the entire board, and says now it's new times and everything is up in the air. When there have been so much turmoil in the company as there has, they have dropped 2/3 of their value. They have got a lot of competitors. I should say maybe that when it was up here at that point, we were playing with some different PE numbers that were up in this area here. I'm just moving around in my value chart. At this point, investors were willing to pay a higher PE, meaning they were willing to take a higher risk on the stock. At this point, we had the stock and we sold it up in around 900-ish, simply because it was very expensive, and that means it is priced for perfection, as we call it, meaning it takes almost nothing before it drops.
And one thing investors don't like, as you said, is definitely things where there's not calm. They really want good news or calm. That's basically what investors want.
There is a storm right now in Novo, and
let's just end it there, because we have a question for one of our members that I really want to get in there, because we stay in Denmark and then we go to Pandora. And Pandora's box might be opening a little bit now, because they jumped 4% yesterday. And we have, and our email address is FOMO, fear of missing out, at MyStockScanner.com. And somebody is fearing of missing out right now and are asking, is it now the turnaround is happening for Pandora?
Yeah, let's not go. I'll not go too much in depth with Pandora. It is a good quality. What happened yesterday, I think, as far as I can tell, because it took quite a good jump up yesterday. It did it from an interesting place. What I think happened yesterday was that since all the gold and silver, all the metals dropped in price, and that is one of the big commodities that Pandora is buying a lot of, I think that was part of what lifted the stock yesterday. People were hoping they could buy some cheaper gold and silver for their inventory.
So in other words, what you're saying, and we're doing this quickly as we're running out of time, that Pandora is not a buy for the 3-point playbook portfolio right now.
I would wait. It's under its 200-day moving average. I would want to see a little consolidation here. We have an earnings coming up soon. So personally, I would just hold off just a week or two, but it's not absolutely not the worst stock in the book.
I had a number in the beginning of the show. It was $27.9 billion US dollars. As a matter of fact, that's the market cap for Saab. It makes them, according to companiesmarket.com, cap.com, makes them the 15th biggest defense stock in the world. It's, of course, bigger than Norwegian's Kongsberg Group, which has a market cap of 25.8, all the way up on top. If you want to know, RTX, 231 billion US dollars. Safran, the French one, 149. Honeywell, American again, at 132. And there might be some asking, what about Boeing? Well, they don't count in here, as they are not only just doing defense. As said, tonight, 10 o'clock, Hans Henrik, in his PJ or something, will report from the earnings from Tesla. Tomorrow we will have Thursday Tech with Liam Flavell, and we'll also have earnings from Amazon. That's going to be interesting, and maybe equally interesting to see how Intel is doing, because they really had liquidity pumped into them with higher stock prices and an investment from the U.S. government. But also Unilever, Thales, and on Friday it's going to be Procter & Gamble and Safran that we just talked about right here. If you have any questions for us, FOMO@MyStockScanner.com. Liam and Hans Henrik will be ready to answer your questions if you have them for us. Left today only to say thanks for joining us here on MyStockScanner Live, powered by the 3-Point Playbook. We're here to help you cut through the noise, pick your stocks with confidence, and feel good about your money. Well, I'll see you on Friday, 12 o'clock noon, when we're back with MyStockScanner Live. Have a good one.